let's also bring on board Mr. Santosh Meena, Head of Research at Swastika Investmart. Santosh, thank you for joining us here on News9. Appreciate your time, appreciate your thoughts. And a very happy new year to you. I think we are speaking for the very first time since the beginning of the year, but not a very healthy start for the markets. You know, we have seen some wild swings on either side, and the market has been rather directionless, but broadly consolidating in a 300-point range on Nifty from about 21,450 to 21,750. What's your overall sense of the markets? Where are we heading?
Yes, first of all, good morning and happy new year to you and your entire viewers. So yes, January is known for this kind of volatility. Historically, November and December month remain strong month, and then we see some kind of profit booking and sectoral rotation in the month of January. So same pattern is followed in this month. So I think, but good part is that despite worry of growth in mid cap and the small cap space, and we were expecting like some major profit booking can be seen in month of January, but there are no signs of weakness in the market. We are just consolidating, and yesterday there was a smart rebound from the 20-day moving average in Nifty, because 21,550, 450 was the area where 20-day moving average was light. So we saw a smart recovery from there, and today Nifty managed to cross 10-day moving average of 21,650. On immediate basis, 21,750, 770 is a resistance area. Once it will be crossed, I believe we can expect a move towards 22,000, 22,200. So for timing, we are in a sideways mode. But after this event of earnings of Infosys and TCS and the overnight data of US inflation number, we may get direction from here. And higher probability is there that we may see upward movement towards 22,000, 22,200. So the texture is buy on dip until we manage to trade about 20-day moving average, which is currently placed around 21,500. If I talk about Bank Nifty was underperforming, but yesterday it bounced back from 47,000 support level. On immediate basis, 47,700, 48,000 is a resistance area. Once it will cross 48,000 mark, we can expect a short covering rally. Some important heavyweights names like Reliance, ICICI Bank, SBI, even HDFC Bank, Kotak Bank are trading near important support level, and Reliance managed to break out previous all-time high resistance. So I believe some heavyweights will participate in this rally to support the market to move towards 22,000 mark.
All right, and what's your sense of the broader markets, the mid cap and the small cap? The rally seems to, seems not to be stopping anytime soon. You know, even this morning we are up 0.5% on both indices. Both indices are in fact, moving towards their all-time high levels. What's your takeaway from the broader markets?
Yes, I was also in the camp that broader market may underperform in the month of January, and large cap may catch up, but things are different. Both are performing, especially mid cap and small cap stocks are continuing doing well. So we should respect the screen until and unless market gives signal there will be weakness in the broader market. We should respect the screen, and the momentum should be continued, and individual stocks and pockets will continue to do well. So I think investor and trader both should not worry, but stay nimble footing. If there will be sign of any weakness, then we will take action. But for timing, you should not worry.
Good morning, Santosh. I'll draw your attention to something the market is terming as Ayodhya stocks. We have Apollo Sindori, which has opened a multi-level parking facility in Ayodhya. Pravaj International luxurious tent resorts along the Brahma Kund in Ayodhya. Genesis International, which is interesting, they have an entire 2D navigational facility along with a 3D map of the entire Ayodhya city available for all the tourists. Indian hotels, Taj Group, they are opening two greenfield hotels under their Vivanta and Ginger brands. IRCTC, of course, has a monopoly on online railway bookings, and Indigo, which is operating daily flights from Delhi to Ayodhya. Now, most of these stocks, Apollo Sinduri has been up last 5 days almost 70%, last 1 month 67%, Pravet 67% also in the last 1 month. Genesis International has been up 15% in the last 5 days. Indian hotels, of course, it'll be a very small portion of their entire portfolio, but that has also been up. So has IRCTC last 1 month 23%. Indigo, of course, again a small portion in their entire portfolio. But what do you make of these stocks which are being termed as Ayodhya stocks, and which one is the one that you would most would want to watch in the times to come?
So let's discuss one by one. So if we talk about the Apollo Sinduri Hotel, so yes, it is in a strong bullish momentum and chart structure is also good. But I think around 27, 2800 mark, it may see some kind of profit booking. So you should not be carried away with this momentum because generally this stock has very low volume for last few days. It is showing strong volume traction. But if volumes are low, if stocks correct, so you will not get easy chance to get exit because there will be 5% lower circuit on the downs, 5 to 10% lower circuit. So better to book profit in this momentum if you are a short-term trader or investor. But if you have a long-term view, you can stay, you can keep your position, and if you get dip around 2000 level, then that will be a good re-entry opportunity. And second stock was a Pravec. So I believe this stock, I'm not comfortable with its fundamentals, so I would suggest better to exit in this current momentum because after this news will out of the way, so I believe we may see some profit booking or correction in this counter. And another was Genesis. So same pattern with the Genesis. I would suggest book profit in Genesis. Timing, I think we may see some more upside towards around 550 kind of level. That will be a good exit level. On the downside, you should keep a stop loss of 450, 460. So in this three counter, you should try to exit at high level or keep trailing with stop loss. And next three, IRCTC, Indian Hotel, I'm bullish, and Indigo. I'm very bullish on all these three stocks. Hold this whole position in this stock, and I believe momentum is likely to continue. If I talk about the IRCTC level, there's a breakout of multi-month resistance, and I'm expecting the level of 1200 in coming days. So you can hold this position and keep stop loss of 875. Indian Hotel, very strong counter, strong up. So hold position on immediate basis. 440, 430 should act as strong support zone. On the upside, 500, 525 is a immediate target level. And Indigo, another strong counter, continue to hold your position. On the downside, I believe on immediate basis, 20-day moving average around 2950 will act as a strong support level. On the upside, 3330 will be my first target, and 3500 is also expected on the upside.
Okay, Santosh, apart from these, what would you recommend for our investors today, the stocks?
Yes, so I have five stocks on my list. So first is heavyweights Reliance. After a many long time, it is giving a breakout of multi-month resistance. So I'm expecting this momentum is likely to continue and it will support the Nifty, where 2770 is my first target. 2590 should be a stop loss. Another heavyweights, ICICI Bank. After a healthy correction, it is bouncing back from 50-day moving averages, and I believe 1040 is the target. 975 should be your stop loss. Tata Power, very strong counter. I'm very bullish on green energy theme, and it is showing strong bullish momentum. And where after a consolidation, it is now breaking out flag formation, where we can expect 370 target on immediate basis. 335 should be a stop loss. Another GMR Infra, it is also in a strong bullish momentum, and it is heading towards triple digit category. On immediate basis, 96 should be your target. 82 should be a stop loss. And last one is from pharma space, Mankind Pharma. This stock is also in a strong bullish momentum. After some consolidation, it is coming out of a rectangle kind of formation where 2300 should be your immediate target, 2080 should be a stop loss.
All right, that's a view coming in from Santosh Meena. Sir, always a pleasure speaking to you. Thank you for joining us here on News9.